I made a mistake in my first month, not because I picked the wrong stocks, but because I thought I knew. I read a few blogs, watched a few YouTube videos, and confidently jumped into the market like I was the Gen Z version of Warren Buffett. The result? Lost almost all of my savings in 3 months because of FOMO on a stock that sounded like a surefire winner, but I didn't stop. I didn't give up. I started learning seriously, trying every little strategy, from index funds, ETFs, to investing apps in small increments. A year has passed, and when I look back, there are things I did right from the start. But there are also mistakes that I wish someone had warned me about sooner. In this video, I'll share each of my real lessons, both right and wrong, so that if you're starting out on the same investing journey as me, you'll go faster, hurt less, and be smarter. When you start investing, no one gives you a guidebook. I entered the market hoping to change my life, but the first thing I got was a slap in the face. My account, here are the mistakes I made, one by one, no embellishment, no excuses. Because if you just avoid these few mistakes, your investing journey will be very different. Crossmark 1. Investing based on emotions, especially FOMO. My number one mistake: I bought stocks because I was afraid of missing out, not because I understood anything about it. I once jumped into a tech stock just because my friend bragged about a 30% profit. TikTok called it $1,000 stock. Facebook groups were buzzing with "Can we still get in?" I bought at the top. 3 weeks later, the price dropped 40%. I panicked and sold, loss, more than $2 million. But more painful is losing faith in yourself. Crossmark 2. No plan, investing on a whim. I don't know, what am I investing for? How much do I need? How long is the investment period? I follow suit with whatever other people are investing. 1 week I bought ETFs, the next week I switched to stocks, then I looked into crypto. No clear strategy. Results: my account went up and down, and my mind was always tense. Crossmark 3. Ignoring risk management principles. I didn't know about portfolio diversification, allocation ratio, or risk limitation. I put 80% of my investment into just one stock. You can guess what happened. Bad news from the company: the stock price dropped by almost half. I lost $6 million in just 10 days. Lesson: never put all your eggs in one basket, even if it's filled with gold. Crossmark 4. Watch the market every hour and lose sleep. I used to open an investment app 20 times a day. Every time I saw red, my heart beat faster. Every time I saw green, I was as happy as if I had won the lottery. I let my psychology be controlled by the chart, and the worst thing was, I equated investing with gambling. I lost sleep, lost focus on work, and sometimes asked myself, I'm supposed to be making money, why do I feel like I'm losing myself like this? Crossmark 5. Not researching carefully, believing in rumors. Once, I bought a newly launched token because someone on YouTube said, "This project will definitely X10 in 3 months." I didn't check the white paper, didn't understand the development team, and didn't know what the token was for. I just knew the price was going up. It did go up. But then it crashed to almost zero in just a few weeks because the team dumped and disappeared. Expensive lesson: backhand index pointing right. Don't understand, don't invest. Don't invest in something you can't explain in 1 minute. Crossmark 6. No notes, no reevaluation. I invested without a trading diary. I didn't write down, why did I buy? What was my goal? How long did I plan to hold? And because I didn't write down, I didn't learn from it. I repeated the same mistake, just because I couldn't remember I had made it before. Crossmark 7. Thinking I need to be a winner immediately, I thought, if I don't make 20 to 30% profit per year, what's the point of investing? That thought made me choose high risks, hoping for quick profits. And every time the market didn't go my way, I got discouraged and lost patience. When I learned this, everything changed. Investing is a marathon, not a 100m race. White heavy checkmark. Conclusion: mistakes are a part of it, don't let them stop you. I lost money, lost time, and lost my initial confidence. But without those mistakes, I wouldn't have learned how to invest properly. So, it's okay to make mistakes as long as you learn something from them. After all the mistakes I made in my early investing, the luckiest thing was, I didn't give up. Because, along with those failures, I also made some good decisions. And these things became the foundation for me to continue investing sustainably. Here's what I did right, and you can apply it too, even if you're just starting out. White heavy checkmark 1. Study seriously. Instead of listening to someone. After the first few losses, I realized I was putting money into something I didn't understand. I decided to study again from the beginning, systematically. I read books, The Psychology of Money, The Godfather of Finance, The Little Book of Common Sense Investing. I watch YouTube, but only follow channels with logical, transparent analysis, e.g., The Plain Bagel, Ben Felix, Andre Jick. I take free courses, like FinHang, or basic investment courses on Coursera. As a result, I understand the market better, and myself better. White heavy checkmark 2. Set clear investment goals. Before, I invested just because people said I should invest. After getting serious, I set specific goals. Why invest? Backhand index pointing right to have funds to buy a house in the next 5 to 7 years. Profit target? Backhand index pointing right minimum 8% per year. Stable is fine. Risk tolerance? Backhand index pointing right losing 10% is acceptable, as long as it increases in the long term. When I have a goal, I am no longer shaken every time the market fluctuates. I know where I am going, and why I should be patient. White heavy checkmark 3. Auto invest. One of the most effective changes I made was to set up automatic investments every month. 10% of salary ETF, 5% of salary bond fund, 5% emergency savings account. Every payday, the money is automatically transferred, no thinking, no emotional decisions, and after 12 months, I accumulated more than 20 million just by not forgetting to invest. White heavy checkmark 4. Invest in simple, easy to understand things. I stopped hunting for hot stocks. Instead, I chose ETFs based on VN30 or SP500, safe bond funds, blue chip stocks with a history of paying regular dividends. I don't need to double my assets, I need to sleep well. And with products that I understand the operating mechanism, I have invested longer, more confidently, and no longer sell off when the market is red. White heavy checkmark 5. Track performance periodically, not emotionally. I created a simple Excel file to track total investment amount by month, temporary profit or loss, portfolio allocation, percent stocks, bonds, cash. Seeing the progress each month, whether up or down, helps me stay sane and not panic. I am no longer shocked when the market drops, because I understand it is a natural part of long-term investing. White heavy checkmark 6. Focus on the process, not on quick results. I have abandoned the get-rich-quick expectation. I learned to be patient with compound interest, respect market timing, time in the market, timing the market, be comfortable with short-term ups/downs. I determined that investing is not about showing off achievements, but about financial freedom in the future. White heavy checkmark 7. Keep the spirit of learning, but don't panic. Every time there is big news, interest rates rise, US stocks turn red, crypto falls, I don't rush to sell, nor do I FOMO to buy more. Instead, I find out, is this an opportunity or a warning? How has the market reacted before? Has anything changed compared to the long-term strategy? I am no longer a victim of the news, but a person who knows how to choose and act intelligently. You don't have to be 100% right to be successful at investing. You just have to get a few things right, be disciplined about what you get right, be patient long enough for the results to show. And that's what kept me going through my first year. and kept me believing in the long-term investment journey. After a year of stumbling and self-learning, I finally built an investment strategy that works for me. It's not a hot trend strategy, nor a $1,000,000 secret, but it's effective, easy to maintain, and helps me sleep well every night. If you're new, or struggling to find your way, I believe this strategy can be a solid start for you. Puzzle piece 1. Goal: safe, long-term accumulation. First, I clearly define my investment goals: no speculation, no expectation of getting rich after 1 year, sustainable growth, average 8-10%/year, financial freedom in the next 10 years, buy a house, retire early. From that goal, I design a strategy so that, less unnecessary risks. Easy to maintain monthly, does not require 24/7 market monitoring. Bar chart 2. Asset allocation: I choose an investment model with a ratio of 60-30-10, as follows. Asset type ratio target: white heavy checkmark index fund, ETF, 60% long-term growth, low cost, stable performance. White heavy checkmark bonds/deposit certificates, 30% maintain value, stabilize assets when the market fluctuates. White heavy checkmark cash, 10% contingency fund, reserved for unexpected risks, sudden investment opportunities. Note: I do not invest 100% in stocks, but maintain a balance between risk and safety. Hammer and wrench 3. Tools and platforms I use simple, accessible tools in Vietnam. White heavy checkmark investment apps. Finhe, automatic fund allocation, choose appropriate risk portfolio. Infina, buy fund certificates and small lot bonds. Cake/TP Bank, online savings with good interest rates. White heavy checkmark asset tracking. Google Sheets, I create my own investment tracking file, with link from Pricelist. Money Lover, manage expenses and track investment money separately. White heavy checkmark tip, automation, I set up automatic monthly transfers to my investment account. Select recurring investment in Finhe, no need to decide each time. Money with Wings 4. Monthly investment division formula: every time I receive my salary, I apply the principle. 50-30-20 advanced, spending, finance, investing, purpose percentage notes, living expenses 50%, food, housing, utilities, transportation, financial reserves 20%, short-term savings, emergency fund, long-term investments 30% divided equally between ETFs, bonds, investment savings. Every month when my income increases, I don't increase my spending, I increase my investment. The longer I wait, the more powerful compound interest becomes. Chart increasing 5. Investment products I choose, and why: white heavy checkmark domestic ETFs, Finhe, VFM-VN 100, DCVFM-VN 30. Advantages: low cost, risk diversification, market growth. I invest every month, regardless of price increase or decrease. Average growth, 8-12%/year. White heavy checkmark bond funds, TCBF, BBBF, slower growth, 5-7%, but stable, reducing risk. I use this part to balance my psychology, avoid too much fluctuation when stocks are red. White heavy checkmark high-term savings, Cake, TP Bank, not a growth investment, but a safe cushion, used for short-term goals and to reduce anxiety when the market fluctuates. Brain 6. Principles of maintaining the strategy, ! Do not change the strategy when the market is red. I commit to keeping the investment portfolio for at least 12 months before adjusting. Even if the market crashes, I don't sell off. A down market is an opportunity to buy more, not a time to panic. Calendar quarterly review. Every 3 months, I spend 1 weekend to review asset ratios, update financial goals, make small adjustments if necessary, e.g. increase bonds if needed to be safer. Lightbulb 7. The investment mindset I maintain every day: I don't need to win anyone, I need to be consistent with myself. I don't compare myself to others, because financial goals are personal. I understand that. A good investor is not the smartest person, but the most disciplined person. The strategy one chose is not complicated. It does not require you to sit and watch charts all day. It does not require you to understand macroeconomics. All you need is a clear goal, a simple plan, a certain amount of discipline. Looking back on my first year of investing, I realized what changed the most was not the balance in my account, it was who I was. Here's the difference between then me and now me. Dollar banknote 1. Then, living month to month, green circle now, living long term. Back then, I would get paid and spend every last penny. The money would come in, a feeling of joy, followed by anxiety when the end of the month came. I used to live just to survive through 30 days. Now, I have 3-year, 5-year, 10-year goals. I know I'm saving to have a fund to buy a house, have the freedom to quit my job if needed, be able to take care of my loved ones when they get sick without drowning in debt. I'm not just surviving each month, I'm building for the future. No entry 2. Before, obsessed with spending, white heavy checkmark now, actively choose how to spend money. Before, every time I spent money, it was an internal battle. Is this worth it? What if I run out of money? I'm short again this month. Money made me anxious and out of control. Now, I know exactly where every penny goes. 30% goes to investments, 10% goes to savings, 50% goes to living expenses. With a clear budget, I spend money without feeling guilty. I'm no longer a slave to money. I'm the one who controls it. Chart decreasing 3. Before, disoriented when the market fluctuates. Chart increasing now. Stay calm and make smart decisions. When I first started investing, I panicked when the market dropped just 2%. Should I withdraw my money? Am I wrong? What if I lose everything? I used to sell out of fear, then regret selling at the bottom. Now, every time the market bleeds, I know, this is a buying opportunity. The market is always cyclical. My goals are long-term, not 1 week, 1 month. I am no longer led by the nose by the news. I actively analyze and persevere. Downcast face with sweat 4. Before, worrying about the future, flexed biceps now, confident with every step. I used to be afraid, will I be able to buy a house? What if I lose my job? Will I have money to take care of my parents when they get old? Those worries made me stressed, sleepless, and even jealous of others. Now, even though I'm not rich yet, I know I'm on the right track. Investment funds are increasing steadily. I have backup funds. I understand how to make money profitable. I'm no longer afraid of an uncertain future. I'm proactively drawing my own future. Brain 5. Before, investing emotionally. Abacus now, investing with mindset and discipline. The old me invested on inspiration. Friends invited me to buy stocks. Newspapers said crypto was increasing. YouTubers asked me to buy gold. I jumped the wave many times and I also rode the peak quite a bit. Now, I have a system, clear allocation ratio. Don't chase news, only adjust every quarter. Don't react emotionally. I don't need to hit it big, just increase steadily. Bar chart 6. Before, didn't know where I was. Calendar now, have a clear financial plan every year. I used to lose money wherever I put it. There was no tracking table, didn't know the profit or loss. Now, I have monthly updated asset tracking table, detailed Excel file, how much to invest, how much growth. Visual charts to self-evaluate progress. Seeing each small step forward each month gives me great motivation to continue. When you start investing, you may expect, I'm going to make a lot of money. But actually, the first thing that changes is not your wallet, but your mindset. I learned how to control your financial impulsiveness, confidently plan for yourself, be patient, disciplined, and driven, and that was the solid foundation that helped me grow rich from the ground up. When I started investing, I had nothing special, no money, no expertise, no guidance, but I had one thing, determination to change, and what I learned after 365 days is, investing is not just about money, it's about how you build the life you want. Lightbulb lesson number 1, simplicity is the best. There was a time when I was chasing after complicated things, hot stocks, cryptocurrency booms, short-term strategies that sounded very appealing, but the more I invested, the more I realized. Simplicity helps me stay consistent in the long run. All it takes is a clear strategy, a regular investing routine, and monthly discipline. I don't need to win big. I need to go far. Brain lesson number 2. Financial thinking is more important than numbers. Before, I thought, wait until you have 100 million to invest. But then I saw someone with a salary of 10 million still investing regularly, and was going much further than me. At that time, I understood, it doesn't matter how much money you have, what matters is what you do with that money. You can start with 100,000 VND per month, as long as you start today. Chart increasing lesson number 3, compound interest takes time, and you need to be patient. When I first invested, my account only increased by a few tens of thousands per month. I was bored. I was skeptical. I used to think it probably won't go anywhere. But after 6 months, my assets increased by 3 digits. After 12 months, I saw a clear upward trend. Compound interest cannot be seen in 3 days, but will surprise you after 3 years. No entry lesson number 4, don't wait for perfection to start. I used to procrastinate because I don't know which fund to choose yet. I don't fully understand what an ETF is. I'll wait until I finish my online course. But the more I procrastinated, the more time I wasted, and money I lost because of missed opportunities. If I could say one thing to me 1 year ago, I would say, start now with what you know. You'll learn more as you go. Direct hit lesson number 5, investing is a personal journey. Each person has different income levels, different goals, different risk tolerances. Therefore, someone else's strategy may not be right for you. Look at yourself. Design a suitable plan and adjust when necessary. Don't blindly follow the trend. Seedling what changed the most, me. I became calmer with money. I understood that financial freedom is not being rich for others to see, but being at peace with myself. I no longer worry about the future, because I am actively creating it every day. If you're asking yourself, should I start? The answer is yes. Today, no need for a lot of money, no need to understand everything, no need to wait for the perfect time. Start with what you have, learn from your own experience, and believe you deserve a secure financial future. If this video is helpful to you, please like the video to support the channel, comment and share what you like most, subscribe to follow simple and effective financial strategies, and don't forget, backhand index pointing right. The freedom you are looking for starts with a small decision today.